Alright, Broadcom has once again delivered a standout earnings report. For Q2 of fiscal year 2025, the company posted $15 billion in revenue, which is a 20% increase from the same period last year. What's especially notable is that Broadcom managed to maintain strong profitability, drawing increased attention from the market. The headline here is unmistakably the surge in AI chip sales. But what truly surprised many people was Broadcom's confident forecast that this growth will continue, not only through 2025, but into 2026. In an industry where few companies provide long-term projections, this level of guidance stands out. Alongside its AI chips, Broadcom also spotlighted its custom silicon solutions. Its powerful Tomahawk 6 switch and its ever reliable enterprise software segment. So let's take a closer look at the numbers. Well, to quickly introduce the company, first, Broadcom is a Silicon Valley-based tech giant that builds much of the invisible infrastructure powering smartphones, internet services, and AI-driven cloud systems. Broadcom doesn't make consumer-facing products, but it supplies core technologies to companies like Google, Amazon, and Apple. The company operates across semiconductors, networking hardware, and enterprise software. Now, in 2023, Broadcom acquired VMware, which is a major enterprise software firm. This shifted Broadcom's identity from just a chip maker to a full-scale provider of AI infrastructure and private cloud solutions. And as you know, it trades on the NASDAQ under the ticker AVGO. Now, Broadcom's Q2 revenue came in at $15 billion, which is the highest in company history. Importantly, this was organic growth. Last year's Q2 already included VMware, meaning the 20% YoY increase reflects actual business expansion, not an acquisition boost. Its adjusted EBITDA, which is a key profitability measure, hits $10 billion USD or 67% of revenue. For context, most strong tech firms operate at like 20 to 30% EBITDA margins, so Broadcom is operating at more than double that. The company also generated $6.4 billion in free cash flow, which is the cash left after paying for operations and investments. This cash is crucial because it enables Broadcom to return money to shareholders through dividends and stock buybacks or reduce its outstanding debt. Now, Broadcom's semiconductor segment brought in $8.4 billion, up 17% from a year ago. Of that, AI-related chips accounted for $4.4 billion USD, which is a 46% increase year over year. That makes 9 consecutive quarters of AI revenue growth. Two product lines are leading the charge: custom AI accelerators, XPUs, and AI networking solutions. The latter includes ultra-high performance switches, routers, and NICs that connect massive clusters of AI chips. AI networking made up 40% of Broadcom's AI revenue this quarter. The standout here is Tomahawk 6 switch, which supports 102.4 terabits per second of throughput. It enables data centers to link over 100,000 AI chips using just 2 network layers, which is a massive leap in efficiency and scale. Now, AI chips are in the spotlight, but Broadcom's infrastructure software division is quietly delivering stellar results. Revenue in this segment hit $6.6 billion, up 25% year on year. Most of this came from VMware Cloud Foundation, VCF, an enterprise cloud platform. Broadcom is transitioning from one-time licenses to recurring subscriptions. So far, over 87% of Broadcom's top 10,000 customers have moved to VCF. That means more predictable, high-margin income. And when we say high margin, we mean it. Software gross margin hit 93% this quarter. Of course, margins aren't static. As XPU sales rise, they carry lower margins. Overall gross margin may dip. Broadcom has already guided 1.3 points drop in gross margin next quarter. But this appears to be a strategic trade-off, so 130 basis points, sacrificing some margin to capture a much bigger share of rapidly expanding markets. Now, from its $6.4 billion in free cash flow this quarter, Broadcom returned $2.8 billion USD in dividends and $4.2 billion in share buybacks, including offsetting dilution from employee stock grants. The company said it also repurchased stock when it believed its shares were undervalued, which is an encouraging sign for shareholders. Meanwhile, Broadcom continues to pay down the $67.8 billion USD in debt from the VMware acquisition. The company aims to bring its net debt down to 2x EBITDA, which is a level viewed as financially stable for a firm of this size. Now, the biggest surprise in this earnings report was management's clarity about the future growth. Broadcom now expects its AI chip revenue to continue growing at a 60% annual rate through 2026, not just 2025. This growth will be increasingly driven by inference, the process where trained AI models generate real-world outputs. Inference workloads are more recurring and monetizable, signaling a shift from experimental investment to real economic return. As for its software business, the VCF subscription transition is expected to continue for another 12 to 18 months, further strengthening Broadcom's recurring revenue base. Now, a word of caution, Broadcom's stock has already had a big run, up nearly 30% in the past month and 85% in the last year. It hit an all-time high just before earnings and dipped about 4% in after-hours trading following the announcement. That doesn't necessarily mean a downturn is coming, but it does suggest short-term volatility is possible. If the stock holds above the $200 level, momentum could remain strong, but a period of consolidation wouldn't be surprising. Broadcom currently has 27 buy ratings and 2 hold ratings with no sell recommendations, but the stock is now near the consensus target price, meaning future upgrades may depend on stronger than expected results or upward revisions to guidance. But Broadcom has firmly established itself as a critical player in the AI era. It's growing steadily across semiconductors, networking, and software, all while maintaining robust margins. Yes, rising exposure to custom AI chips may slightly lower profitability, and yes, external risk like US export control still exists, but Broadcom has shown remarkable discipline, transparency, and financial strength, which are qualities that matter to long-term investors. So if you're looking for a company that's not just riding the AI wave, but building the foundation beneath it, Broadcom deserves your attention. So what do you think of Broadcom's outlook? If you are a shareholder or thinking about becoming one, I'd love to hear your thoughts. All right, subscribe to my channel if you haven't already, and I'll see you next time. Peace.